Singapore's central bank is warning investors of the huge risks when dealing in cryptocurrencies. It says the ongoing turmoil in the crypto industry is a reminder that there is no protection for customers who deal in cryptocurrencies. They can lose all their money. The Monetary Authority of Singapore said this in defense of its different treatment between Binance and the collapse of FTX. MAS notes that several misconceptions have arisen since then. It explains that Binance was placed on their Investor Alert List, or IAL, because it was actively soliciting users in Singapore without a license. It says Binance also went as far as offering listings in Singapore dollars and accepting Singapore-specific payment modes, such as PayNow. In contrast, MAS did not find evidence that FTX was soliciting local users. Trades on the crypto exchange also could not be transacted in Singapore dollars. Still, MAS warns that it was not possible to protect local FTX users, such as by ring-fencing their assets or ensuring that FTX backed its assets with reserves. It could not do this as FTX is not licensed by MAS and operates offshore. As to whether MAS should provide an exhaustive list of information on all offshore crypto exchanges, it says that's not possible due to large number of such entities. It also notes that no other regulator in the world has done so. But it reminds investors this doesn't mean that entities that are not listed on the Investor Alert List are safe. And for more, we are joined by Zann Kwan, a board advisor of Raffles Family Office. Now, Zann, cryptocurrencies, they've plunged in value over the last year or so, yet interest remains high despite, repeated regulator warnings and all these high-profile crypto collapses. I mean, very simply, is it just because people have a high-risk appetite?
I think it reached a point that it's hard to put a lid on a pot of boiling water. The retail market in Singapore has been exposed to cryptocurrency since 9 years ago when Bitcoin ATM has been introduced. And since then, there has been a lot of hype and also a lot of focus on the technology development in terms of what blockchain technology could do to the finance industry, even retail, trade financing, and also some of the projects, the high-profile projects that various governments has been involved in. So some people, yes, there are speculators who want to speculate on cryptocurrency, and there are also, I would call them participants of the cryptocurrency industry, where they just want to dabble. About. So I think that builds up, and over the past 9 years, Singaporeans, they are also very educated Singaporeans retail buyer, and some of them have been in the market for the past few years. So I think all the talks and the hype and the fear of missing out is real. That leads to I was quite surprised that a huge percentage of the FTX customer were actually from Singapore. Yeah.
Well, Zann, it is difficult to regulate this sector. Just classifying existing cryptocurrencies correctly is tough enough, but regulators want to be able to ensure that there's space for opportunities too. So what makes regulating the sector so challenging?
Oh, okay. So a few of us just came back from Bali from the V20 summit. We have regulators, or 25 regulators from 15 countries, engaging with the private sector, the public sector, the private sector, come together to really narrow down what are the few challenges. One of the key challenges is the harmonization or the uniform language use, and also the same threshold. Different countries has been using different threshold for cryptocurrency KYC purpose, and even the terms. You have virtual assets, you have digital currency, and some of the tokens. You can call it a hybrid tokens or utility token. Even the term used are not harmonized. And then with that, when we talk about travel rule, which is the information that you put with the crypto when you transfer them across borders or across service provider, that itself right now, out of 98 FATF countries, only 11 countries, and Singapore being one of them, is participating or enforcing in the travel rule regulation. So that makes global regulation on a borderless asset difficult when only 11 countries or a handful of countries are enforcing certain things. On top of that, different countries use different terms and different threshold. I think that itself it is a burden or a barrier to regulation or the fast implementation of the regulation.
Now, Zann, when it comes to unlocking the technology potential versus the investment potential of cryptocurrency, do people or retail investors, do they see any difference?
Right. Surprisingly, when I spoke to some investor, or you may also call them participants of Web3 or the cryptocurrency market, a lot of them think that they are investing in the technology, but in actual fact, they are actually holding on or investing in a tokenized version of a traditional asset. So I think one thing that's important for any investor who would like to go into the industry or invest in the market to be mindful, what are you actually investing? Are you investing on the technology or just a digitized version of a traditional asset? Which brings back to, I think, the regulation point where the regulators are looking at activities in the crypto market at what they call it, same activity as traditional finance, same risk and same regulation. However, the industry is looking at from a different perspective. They are looking at it as similar activity, similar risk, but you need specialized regulation. So once again, when you have these two ends, we need definitely more work to be done and more open dialogue between the private and the public sector.
And be mindful of what you are investing. That was a good takeaway. Thanks very much, Zann Kwan, Board Advisor of Raffles Family Office.